All right, so in part one, we started the initial underwrite process of the Airbnb property we found in South Florida. Love the property. It's a beautiful property. It's being advertised as generating over $100,000 a year, and we wanted to dig into it a little bit more to see whether or not it was appropriate for us to submit an offer, and if so, at what price. There was a couple things that we wanted to mitigate in terms of risk. One thing is we don't want to base our offer off of assumptions. So I requested the actual financials and we started to dig through it to see what we were dealing with. Welcome back, part two. Okay, so in part one, we used the revenues that we found in the listing, which stated that the Airbnb property was generating like $100,000 a year. After going through the financials that were sent over, I looked at the trailing 12 months, so T12, and what I found was that it had generated $77,000 in the last 12 months. However, the 12-month period before that, so 2021 to 2022, March to March, it did generate just under $105,000. Looking at trends, and there could be some explanation for it, but it's likely that that area is just seeing more competition. It would be a little safer to go ahead and model out the 77,000 versus the 105 at this point. So that's what you see here, 6454, that's 77 divided by 12. I was right on with the expense ratio. I modeled out based on assumptions that the expense ratio would be about 67%, and it came in right at 65. So all these expenses here are the actual expenses with the exception of the property management fee. The current owner is self-managing the property, so he doesn't have this property management fee. However, and I always tell people you always want to model out the property management fee, even if you do plan on self-managing, because, you know, if you're a serious investor and you want to scale, you want to buy multiple properties, then the chances that you're going to manage all of them, that's just not likely. So, you know, regardless of the strategy, whether it be long-term or short-term or whatever it is, I would always model out a property management fee the same way I'll usually include a vacancy for a long-term rental. I don't have it represented here because this is kind of a different situation. But so when we put all that together, what we see is negative cash flow, $13,000 a year. You know, that's the long and short of it. The only thing that could change this is the debt structure. And if you notice, let me move this out the way. If you notice, look what interest rate I'm using. I'm using an interest rate that's not even available in the marketplace right now. 4%. I think the 10-year treasury is a little over that. So we'll probably have something around 7, and it's not even enough cash flow to cover the mortgage note. Even if we bump it up to $100,000 top line, it's still losing money. So if we come over here to the long-term approach, believe it or not, that actually performs a little bit better. I was able to find some pretty, good comps that were, between $6,500 and $7,000. And actually the subject is superior, in my opinion, in terms of design and square footage. The fact that none of those other comps are on a body of water. This subject is on a body of water. And I think that being able to generate $6,800 a month as a long-term rental is realistic. And so when you compare those two, the expense ratio with that is going to be a whole lot lower. The expense ratio for a long-term rental is only 32%, which gets us closer to generating a profit, but still not quite. And, at the end of the day, I would have to buy this for, I think, 575 in order to hit the target returns that I want. So, we're typically targeting something like, 28 and up on the internal rate of return, and then, 2.5 or more with the equity multiple. We really want to see 30 and 3. And the difference from 825 to 575, I don't expect the buyer, the seller, to have that much wiggle room. As far as I know, he actually has some other offers on the table. But, a lot of people, again, they buy on emotion and without doing the due diligence and really looking at the numbers. And that's fine. I wish him the best, but it won't be me.
Wouldn't let that shit happen to me, though.
So this is what it looks like to dig a little bit deeper. If this looked good, we would go into the next step, which is digging a little bit deeper into, what's expected as far as different laws and regulations concerning short-term rentals in this area. I looked into it a little bit. The property is licensed as an Airbnb, and there's quite a few other things that we would do, but at this stage, because the numbers just don't, it doesn't really make sense to invest any more time into it, then we just move on and look for other property. So hopefully this is helpful, and never jump too quickly at a beautiful property that's supposedly a great deal. The numbers will tell us, math will tell us if it's a good deal, and these returns will tell us if it's a great deal.